Hello and welcome to the March edition of Pork Talk. Pig prices have been under pressure for a number of months now, while feed prices have been high, creating a difficult climate for pig producers. Today, we examine the signs that this situation could ease somewhat in the coming weeks. On our domestic market, supplies are now expected to tighten, following from difficulties with fertility levels during the hot summer last year. It's difficult to tell exactly how much this might affect supplies at a national level. However, slaughter is estimated to be behind year-earlier levels in February so far. However, in general, the change in supply level across Europe is a better predictor of British pig prices than UK production alone. Recently, supplies are also reported to be tightening in Europe. This led to a slight uplift in EU pig prices in the week ending the 10th of February, narrowing the gap between UK and EU pig prices slightly. If prices on the continent continue to rise, then the UK might also follow suit. However, at the moment, the gap between UK and EU pig prices is still around 22 pence per kilogram, noticeably larger than the long-term average of 19 pence per kilogram, so import pressure wouldn't necessarily ease quickly. Reports also suggest that demand remains weak across most of the continent, so it may be difficult for prices to rise further unless this situation changes. China's African swine fever situation remains a potential source of optimism for later this year. Looking at input costs now, there have been some positive developments on that front recently. London wheat futures have been moving down, and new crop futures are trading at a significant discount to old crop prices, thanks to forecasted larger global wheat crops in the coming season. With feed prices currently over 60% of the cost of production, any decline would provide some welcome support to producer margins. Of course, with Brexit approaching, the outlook for the future remains somewhat cloudy. With uncertainty over our future trading relationship with the EU, it's not clear how important EU production levels will be for the British market in the future. Increased trade facilitation costs might provide room for an uplift in pig prices. However, if access conditions for lower cost producers, like the US, advance, prices could come under pressure. There are also other areas of concern, such as a devaluation of the sow market and a reduction in labour availability. AHDB recently conducted a webinar discussing a number of the issues that might arise if a no-deal Brexit emerges, which you can find on the Brexit section of the main AHDB site via the link below. Otherwise, for more up-to-date information around a range of topics, please visit the Prices and Stats section of the AHDB Pork website.